Howdy folks, this is Trader Big T with your trading lesson of today. I'd like to look at a live call that I made in the chat room that I frequent. It's Tim Alert's chat. If you haven't signed up already, you might want to consider doing that. It's a pretty good room. I am there to answer private messages and make calls in the main window, and the moderator, Reaper, Michael Good, does a really fine job there, and he also makes a lot of interesting stock calls live. Let's take a look at a chart, and I wanted to comment on some of the things that traders do to get themselves in trouble. One of our traders I saw in the room wanted to go short on Quicksilver, which is symbol ZQK. This stock was very strong, and right here we're actually looking at a 5-minute chart. Profit charts does a pretty good job here with an exponential 8 average. And what we see here is a very, very strong up day. And I called a breakout in the stock for possible long entry late in the day, late in the session towards the end of the day. Now, this is actually a known pattern where a stock is really, really strong on a session, and then it gets to a point where it starts to consolidate and kind of basically move sideways. The 52-week high for this stock was actually 382, and the stock had managed to actually earlier penetrate and actually reached all the way up to, just for a little bit, at 391, right about here where my arrow is pointing. And then it just kind of leveled off a little bit and kind of stayed somewhat near its highs, just going straight across in this consolidation. And this was actually a pretty good sign that there was a strong chance that this consolidation would experience a breakout later, in like the last hour and a half of the session. So this stock was really never a shorting candidate. But one person tried to short the stock, and I was a little bit surprised there. And they took their short position when the stock was trading about 388, so it was very comfortably holding the 52s. Really not a really good idea. This is a very well-known pattern. It's actually referenced in a pretty well-known trading book by Tony Turner, Beginner's Guide to Day Trading, where a stock, I think it's pattern 4, trades very strongly in the morning, then consolidates like straight across near the highs through most of the session, and then breaks out later, right? Towards like that 1:30 to 3 and for Central Time. It actually be 2:30 to 4 in the East. And I made the call over here when I saw that it started to bust over. It started to bust over like that 390 area that it had reached that previous high in the day. And right then and there, I called, said, go long right here. And we had a nice little move here, and we penetrated all the way over to the high was like 404. And what did we close at? We closed actually on the high. So it was a beautiful, beautiful play here. This is not a play that you would go short on. It just isn't. There was nothing about this pattern that would indicate that a trader would be seeking to short this because it looks too strong on the day or it's gone up too high. Let's actually take another look at the chart, a daily chart of ZQK. Right here, you can see it's been on a tear. The stock has been on a tear just in the last like month and a half. It's just straight vertical here, and it's gone up way up to here from a low here of what, like 198 to 4. It's basically double in its price in just like a month and a half. And contrary to popular belief, when something goes up massively, it doesn't quite completely mean that it's just going to come crashing down. You have to look for the signals. When you trade, you look to trade what you see is dynamically happening, not what you expect to see. That's a common mistake that traders make when they're trading, is they expect to believe that it's going to be a short, so it becomes the only thing that they really see, and they just can't get out of their head that maybe the stock will just go up and power up even more and result in losses. So think about that. When you trade, that you have to not trade discretionarily. Trade in a way that reflects your understanding of patterns that you were very well familiar with, that you're not acting impulsively. And this would be a great example of a very classic call, breakout call. I did not play it. I was discussing it, did not play it. I probably should have played it because it was a pretty easy play, especially when we saw this volume increase that also occurred. You can see where the cursor is pointing. it gave really good signs that this was going to continue to get a little spurt out of it towards the end. Now, you could have entered earlier, but I take the classic pattern right at the end of the day when I think that it's going to bust through those earlier highs. Okay, folks, until next time, we'll see you in the trenches as you learn to trade with Big T.